Hello, today's wealth building video, I'm going to be focusing on the stock and bond market. It's a little bit different than the previous video on yourself being your biggest asset and basically trading your time for income. Now you're going to be thinking a little bit wider, trying to diversify your wealth assets, and you could start investing in the stock and bond market and basically having your money start to work for you potentially. So a few things that you need to know. When you are a stock owner, you're actually a part owner of a company, and as a result you are able to share in the rewards and also failures of the company. So if the company is doing well, they may be sending out dividends, which are basically parts of the revenue that they're generating. They're giving it back to their shareholders. And also just the stock price, and we can just use an example of $10 a share. When you purchase it, that could go up or it could go down, and those are typically driven by what the company is doing currently, but also what the expectations of the company moving forward. So if the expectations that it's going to be doing really well, or if it's starting to outperform, it could go up, or if it's underperforming, you could start to see the shares go down. Another important aspect when it comes to the stock market is it's a lot more volatile than what you're probably used to if you're not used to investing at this point in time. So the market value could go up or down kind of sporadically throughout the course of the year and even over a couple years. So it's definitely going to be more of a long-term focus that you want to have when it comes to this type of investment. Moving on to the bond market. The bond market will be a little bit less volatile than what the stock market is, but it's also really different. When you invest in a bond, basically you're investing in an asset that you're lending funds to either another company, or it may be a government bond. And so basically how you build wealth that way is that company or government is going to make payments to you in the form of coupon payments. And that's basically the interest that they're being charged for you lending them the money. So that's the primary way that you typically make wealth and build wealth through the bond market. The bond value can also change, and that's usually more tied to interest rates often. And you may see that go up or down slightly. It won't tend to be as wide of a range of movements or as volatile as the stock market. So that's why a lot of people would say, in general, the stock market's more volatile than the bond market. If you don't have a high risk appetite, then you may be better off investing in the bond market. But that's always a conversation I work through with my clients, is finding out where that sweet spot is between what they actually need as far as investment returns, and then aligning that with the risk associated with all the different options out there. Just like the stock market, you want to be diversified, and there's a few different ways you can do that for both the stock and bond market. You can buy ETFs, which give you quick diversification. There's also mutual funds and index funds that you may want to research and look up. Feel free to reach out if you have any questions. This is very common stuff that I'm able to help my clients with really easily. But yeah, it's definitely one of the top ways that people build wealth over time. And I'll be talking in my next video about real estate, which is another common way that people build wealth. Take care.